Alright everyone, hello, Bruno here. Today as always we have a new video. As always we're trading binary options on Pocket Option. I left a link to the broker in the pinned comment and in the description under this video. Definitely join me on Telegram where every day you can copy my free signals in real time and make money together with me. Join, everyone is welcome. Let's begin. So look, today we're working with an interesting indicator that we haven't used in a video before. I haven't shown you how it works yet, but overall I can say there's nothing complicated about it. The main principle is the same as with the RSI indicator, so if you have already traded using the RSI, you will not have any difficulties at all. The mechanics are pretty similar. Let's begin. What is this indicator called? It's called Stochastic. We selected third column, second from the bottom, and let's begin. Look, the principle is extremely simple. The only thing it does is slightly simplify understanding support and resistance levels. For example, let's look at the main points of this indicator. We have the 80 level and the 20 level. The 20 level means a support zone on the chart, or more precisely an oversold zone, meaning the price basically has nowhere else to fall. And the 80 level means a resistance zone on the chart, or an overbought zone, when the price basically has nowhere else to rise and needs to make a correction before continuing upward. The price always moves in waves. Movement upward, pull back. Another wave builds up, movement upward continues, pull back, another correction happens. That's exactly how price movement works. Right now, you can see it on this example. Movement upward, we have an uptrend, but movement upward, pullback, correction. Movement upward, pullback, correction. Movement upward, pullback, correction, and so on. That's how all chart movement is built. So just by understanding this, you can already realize that if a correction is happening during an upward move, then after the correction, the trend will continue. Your only task is to find the points where the correction ends and open positions upward or downward. Because in a downward movement, the logic is exactly the same. A correction also happens. After the correction, the trend continues, another correction happens, and so on. Just understand this. And then the quantity and the quality of your trades will grow exponentially. All right, let's begin. Look, right now the two moving averages on the stochastic are at the 20 level, but on the chart we can see that the price is near a resistance zone. So this is already an interesting situation. Look, the moving average crossing happened here. The price was at the 80 level. This is an overbought zone, and it really is overbought because the price was moving upward and reached its maximum. Then a correction happens. On the stochastic, we see the moving averages falling to the 20 level. Another crossing of the moving averages happens around the 20 level. And on the chart, we see that at least two candles are already green, meaning a correction after the price drop from the support zone and continuation of the trend. We open a position here for $100 upward for continuation of growth, because on the stochastic we see that there are moving averages are at the 20 level, and on the chart we see a correction movement happening here. So in case of a loss, we'll open upward again and wait for a better entry point for continuation of the growth. Let's place another level here. And next time the price approaches this level, if our position closes in a loss, we'll open the recovery positions there. Actually, we can do it right now. 3 trades of $100 each, opening recovery trades for the first losing position and for a price reversal, meaning continuation of the main upward trend. Done. Now we wait for the result. Meanwhile, let's continue searching for the next situation. Look here, on the stochastic, the price is once again near the support zone, around the 20 level, and we can see strong volatility here. The price trend is downward, but the price is most likely near a support zone. from this support zone, a reversal already happened before. Pay attention to the candle wick. The wick is below, plus we have a green candle forming that almost completely covered the previous red candle. And now we once again run into a correction. And once again, we'll open recovery positions after the price touches the support zone. All right, look at our first position. After the price already touched the support level, our $300 trades closed in profit. We love to see it. We recovered the previous losing position, and other two trades also closed successfully and brought us profit. This position is a little risky. Look, if there's no sharp impulse, then we'll get a loss. The price wanted to make a sharp jump here, but it didn't work. So once again, I missed my entry point a little. I should have opened slightly lower. Well, let's hope the price now just flies upward without any pullbacks. And let's move to the next situation. On the next situation, we'll recover the loss on the British pound and Japanese yen. And here, once again, a correction happens. So volatility is high, the trade is risky, but let's see. Here on this asset, Australian dollar and New Zealand dollar, the price is at a maximum. From this maximum, we will open a downward position, because on the stochastic, the price is at the 80 level, meaning the overbought zone once again. And we open a downward position here. Right now, let's open 3 trades for $300 and wait for the result. Next position. By the way, the previous position closed in profit. We love to see it. Let's see what happened. Yeah, British pound and Japanese yen, it was like this. The trade turned out pretty confident, I'd say, especially in the second half. The trend only went upward. Very confident trade. And these are exactly the kind of trades we get. Excellent result. Here we open an upward position. 2 trades. Let these be our final ones. If the price flies upward now, we will not open anything else. We'll finish here. Right now, I open here based on the logic that the upward movement already started. By the way, on the Australian dollar and New Zealand dollar, our position closed in profit. Again, love to see it. Let's see what happened here. Here's what happened. We opened at this point and the price only moved downward. Of course, there were correction movements against the downtrend, but that didn't bother us at all. The trades were really clean, extremely clean. The price never touched our entry point again, and after we opened the position. And now we still have 2 trades, but they're still risky. Here I opened based only on the fact that I see a sharp upward jump in price. And on this sharp jump, I opened simply for continuation. But right now, the price will more likely start reversing and making a correction, because on the stochastic, the moving average is at the 80 level. Notice that on the stochastics, we are now expecting a crossing of the 2 moving averages. And that's exactly why we will definitely get a pullback from this level. But we already earned money, and now we have $49,252 on our balance, and that's an amazing result. Before ending this video, I want to remind you that you can join my Telegram channel and receive free signals every day. These are trades that I personally take and simply share with you. So, if you're interested, definitely join, trade together with me and the other guys already in our group. Thanks everybody for watching. See you next time.